Behaving Wealthy presents the High Worth Shift podcast. Behaving Wealthy. Be, have wealth. Who do you have to be to have wealth? The only difference between rich and broke is worthiness. Your behaviors and your habits are a reflection of your feelings of worth. I'm Robin A. Young, and I'm here to give you enough simple rich behaviors to increase your worth, your wealth, and your freedom. In fact, my promise to you is that every rich behavior I share could yield you 3 times richer results, creating your high worth shift. Welcome back to the High Worth Shift podcast. It's Robin A. Young, certified financial planner and CEO of Behaving Wealthy. And I'm so excited that you've chosen to spend your valuable time with me. Are you prepared to match your income in retirement? Can you replace your current income so that you can maintain your standard of living in retirement? What do we all want? Freedom. Freedom to buy what we want, when we want, with whom we want. Freedom starts with the ability not to worry about money and instead to feel secure knowing that you can afford to pay your bills and pay for the things that you enjoy. That security comes from easily paying for housing, transportation, communications, food, insurance, and fun expenses. The money to pay these expenses comes from a paycheck, from your salary or business income or bonuses from either your business or your job. In essence, your paycheck is the source of your ability to pay your expenses, which affords your current freedom. You work, you earn, you spend. You work, you earn, you spend. Repeat. Your earned income pays for your spending. So how do you afford your current lifestyle even when you stop working and earning income? That's called retirement. The ultimate goal of retirement is not having to work, and you can easily maintain your current lifestyle. Picture this. You get to enjoy your home, pay your bills, weather any storms, travel the world, spoil your grandkids, play with your friends, and give to those in need. Doesn't that sound wonderful? And no worries about the economy or markets, just enjoying your hard-earned freedom. So how do you make this a reality? You must start now to create your necessary retirement, which is the 7th millionaire goal. Building enough money for retirement is one of the accumulation goals. You start where you are. No matter where that is, it's enough. It's enough because you can let time and compounding do the heavy lifting of growing that money to achieve your desired goal. So what is necessary retirement? Necessary retirement means the essential amount needed for you specifically to have on the first day of retirement. Before I answer this incredibly crucial question, it's client spotlight time. I had a discovery conversation with a prospective client. The conversation went as follows. I said, I would love to know why you wanted to connect with me today. She said, Robin, the one thing I do that I'm so proud is maxing out my 401k contribution. I do want a second opinion to ensure that I'm on track to retire comfortably. I replied, kudos to you for maxing out your 401k contribution. Then I said, to give you a second opinion, I need personal answers to 5 questions. Question number 1, how much do you need in retirement to pay for your living expenses each year? Question number 2, have you indexed those yearly needed retirement expenses for inflation? Question number 3, do you know how much you need in your retirement account on the first day of retirement to never run out of money? Question number 4, how much do you need to contribute each year now to achieve your necessary amount needed on the first day of retirement? And then finally, question 5, do you currently live on more or less than net of taxes $44,225 per year? Her response, I don't know the answers to the first 4 questions, but my company told me that I max out my contribution usually by November every year, and I definitely live on more than $44,225 per year. I asked her question number 5 because the maximum 401k contribution was calculated by Congress to ensure that if people maxed out their retirement contributions annually, then when they retired, they would have enough in their nest eggs to pay themselves the median household income of $44,225 each year of retirement. Generally, if you earn more than the median household income of $44,225, then you need to max out your retirement contribution at work, and you likely will need to contribute an additional amount outside your 401k to amass enough to maintain your lifestyle in retirement. Yay! She hired me immediately because she wanted to know the answers to those 5 questions. I calculated her customized answers to those 5 questions. Interestingly, although she was contributing the maximum 401k contribution, she needed to save an additional $2,800 per year to maintain her current lifestyle expenses during retirement. Because she was not contributing enough to maintain her lifestyle when she retires, she would have at least $177,097 less at retirement than she needs. That's a nearly $200,000 shortfall. She had a decision to make. She had 3 choices. Choice 1, save $2,800 more per year, which is an additional $233 more per month. Or choice 2, work 26 additional months, which is over 2 more years beyond her full retirement date to be able to afford her current lifestyle later in life. And choice 3, cut out $1,350 every single month in spending for the rest of her life. In other words, spend $1,350 less in bills, fun, shopping, food, travel, etc. She was stunned into silence again. Once she was ready to respond, she said, I would have to cut out my entire monthly fun budget. I said, true. Or you could work 2 more years. Or that's when she interrupted me by saying, I'll save the additional $233 more per month now. Then she stated in a sad voice, I wish I spoke to you 5 or 10 years ago. I reassured her about the behaving wealthy principles of no shame, no judgment, just take a baby step today. After our meeting, she sent me an email request to calculate the answer to question number 4. How much do you need to contribute now to achieve your necessary amount needed on the first day of retirement if she would have started working with me 5 or 10 years ago? I replied, that's not a good idea to shame yourself. You've started now. Let's focus on the future. And then she said, knowing will help me stay committed to my customized plan. So I reluctantly calculated her numbers had she started earlier. I'll share with you what waiting cost her. She's currently 43 years old and she has 24 years until retirement. The amount that she needs on the first day of retirement is $1,600,200.65 to comfortably maintain her lifestyle during retirement. In order to achieve her necessary nest egg, she needs to save $25,811 every single year between now and her retirement date, which breaks down to $2,150.92 every month until she retires. Let me share with you how much waiting cost her. If she would have started working with me 5 years ago, to achieve that same $1,600,200.65 to comfortably maintain her lifestyle, she would only have to save a little more than $18,000, which is $7,000 less a year than what she has to save now. That means only saving $1,500 per month, with more than $600 to spend on whatever she wanted. What could you do with another $600 per month to spend however you wanted? You have more to spend now and later if you start now. So what if she would have started working with me 10 years ago to achieve that same end retirement goal? She would only have to save a little more than $12,500, which is over $13,000 less a year than she has to save now. That means only saving a little over $1,000 a month to reach her retirement goal, with more than $1,100 extra to spend on whatever she wanted every single month. What could you do with another $1,100 per month to spend however you wanted? As you can see, waiting cost my client quite a lot. I have two questions for you. One, are you sure that you are on track to match your income in retirement? This is a separate question from maxing out your 401k contribution. Question number two, what is waiting costing you? I can emphatically state that if you don't know for sure the answers to those two questions, then you are on course to not have enough, which means you will not have the same freedoms in retirement that you enjoy now. You've worked too hard to lose in retirement. To be worried and anxious and stressed about money. Take the right baby steps today to ensure that that doesn't happen to you. It's your responsibility to assure you get to retire in the manner that you envision. You deserve more now and more later. I want to help you get there. Wealthy people behave differently than high income earners. They master money habit number 2, know it, by having clarity on how much their goals cost. However comfortable the truth may be. People who are financially free seek out their money facts because they know the actual difference between what they really want and where they are now. They know what steps to take to sustainably achieve real independence. They ask this question, what else can I do today to make my tomorrow easier and freer? Wealthy people start retirement planning as soon as possible. Retirement planning is simply creating a comfortable forever plan that ensures that you can maintain your lifestyle whether you're working or not. Retirement planning means knowing your numbers and knowing your vision. Financial security is knowing that you have the money to pay for your living expenses regardless of whether you're earning money or not. This is critical because in retirement, you'll have the same category of expenses. You'll have housing expenses. You'll have transportation expenses. You'll have communication expenses. You'll have food expenses. You'll have insurance expenses. And you'll have all of your current fun expenses like shopping and pampering, entertainment, travel. You may be wondering, how does this work? You see, many people don't think about the practical side of retirement planning. Retirement starts when you stop earning and your retirement nest egg pays for your lifestyle expenses. In retirement, you pay yourself from your nest egg. Your nest egg, or the total accumulated retirement funds, are used to replace your paycheck. That's all retirement is, replacing your paycheck. Now, think about it. You currently receive a paycheck. Your income either comes to you weekly, every 2 weeks, bi-monthly, or monthly. The source of those funds relates to the work that you do in a given period to earn that money. However, in retirement, you pay yourself from the money that you've accumulated. If you plan and execute properly, then you can replace your income. The key is that while you're working, you save and allow that money to grow so that on the first day of retirement, it has grown enough to replace your current income. That's why retirement planning is so important, because the bills keep coming. The better you plan for retirement, the longer you can pay for the bills that keep coming. Retirement planning is paycheck replacement planning. What's essential is that you save enough to replace your income. If you don't save enough, then you will not have the same lifestyle that you have now. I'm pretty sure that when you say that you want to maintain your lifestyle, that you don't mean not having enough money to pay for all the experiences that matter most to you. Between today and your retirement date, your number one goal is to save enough so that your money works hard for you so that you have enough to replace your current paycheck. The worst thing you can do is wait and do nothing. That's self-abuse through self-sabotage, because you can decrease your money anxiety, shame, and stress by knowing the answers to the above retirement questions. Do you know that the most common money question and money worry is, will I have enough money? And I understand why it is. Did you know that the advice of only withdrawing 4% from a nest egg as to never touch principal no longer applies to most people? The reason 4% is rarely enough to cover expenses in retirement for the average person. This was true when people had a pension, or they relied solely on pensions and Social Security income. I don't know about you, but I'm not leaving my retirement goals and vision up to the government. I would rather ensure I have enough myself. Did you know that less than 18% of Americans currently have pensions? That number is projected to be less than 10% in the next 20 years, which is why retirement planning is more important for you than it was for your parents. Do you know what your enough money amount is? Most people don't know what their enough money amount is. In other words, there's a specific and unique answer to this question for you. By knowing this information, you no longer have to worry whether you'll have enough money. The secret is to know your numbers. You can shift your energy toward knowing your enough money amount and then using your talent and time to achieve that number. This shift will change your life. The greatest benefit to you of knowing your retirement numbers is you can stop worrying about having enough. Instead, you're already smarter about money after this episode, because you can shift from worrying about an unknown to focusing your energy on achieving a known goal. Simple. Not necessarily easy, but simple and achievable if you take consistent baby steps. In general, to understand how much is enough, you must understand what the enough money is expected to cover. You've worked hard for decades. So picture this. Today is your first day of retirement. You have a nest egg or the total amount of retirement funds you've accumulated to replace your paycheck. You feel a sense of relief because, yay, you did it. Now what? How does your nest egg replace your income? How do you allocate it so that you don't run out of money? First, you must factor in inflation. Look at this inflation chart. As you can see, the cost of stamps increased from 6 cents in 1970 to 63 cents today and climbing. Or look at how inflation has increased the cost of eggs from 60 cents in 1970. Today, eggs can cost at least $5 and even up to $7 in some stores. I must highlight the cost of a house then and now. The average cost of a house in 1970 was $26,600. That's lower than the average cost of a car today. 50 years later, the average house costs over $368,000. This chart shows you that whatever you spend today will be higher decades from now when you are in retirement. Remember, in retirement, you are no longer working. Your nest egg is all that you have to cover your expenses for the rest of your life. You must have enough money in your nest egg to cover the rising prices of your lifestyle during retirement. So, your nest egg must be sufficient to cover the inflation-adjusted costs of what you spend now. A sufficient nest egg equals freedom. You deserve freedom. You're worth it. By it, I mean you deserve to have enough money. Make the worthy choice and take a baby step today. It doesn't matter if you feel that you aren't good with money because retirement avoidance is too expensive. It will cost you your freedom and dignity. Remember, you can't finance retirement. Today's rich behavior is to determine how much you are currently contributing to your retirement accounts. Add up your total retirement contributions for 12 months, which you can see on your last paycheck of the year. Then add up the total retirement contributions your job matched for 12 months, which you can see on your last paycheck of the year. Finally, total the two contributions, yours and your match, to determine the total amount to know how much you contribute per year. This is your first step. If you're ready to ensure that you are on track, then hire me so that I can calculate your unique retirement answers to the 5 questions I shared above. Text retirement to 888-85-WORTH or 888-859-6784. Are you ready to know? 1, how much you need in retirement pay for your living expenses each year. 2, how much you need to cover inflation in retirement. 3, how much you need on the first day of retirement to never run out of money. 4, how much you need to contribute each year to achieve your goal. And 5, if you need to invest more than you're currently contributing to your 401k, you should know that your richer results of freedom now and later are on the other side of today's rich behavior. Get what you deserve. It's up to you to make your move. Now that you know today's rich behavior, it's time to make your move. Tell us when you complete today's rich behavior and what richer results you experience because you took today's baby step. Text 888-85-WORTH, 888-85-96784. We want to know how you are increasing your worth, your wealth, and your freedom. I know you're worth it, and I want you to know you're worth it. Most importantly, I want you to behave like you're worth it. If you loved what you learned today, please be sure to hit the follow button so you never miss a future episode, and leave a review to help me reach even more listeners just like you looking to maximize and turn their hard-earned income into more. The High Worth Shift podcast is created and copywritten in partnership with Robin A. Young and Behaving Wealthy. Be sure to rate, review, and follow the show on Spotify, Apple Podcasts, Google Podcasts, or wherever you get your podcasts. Especially, be sure to rate, review, and follow the podcast if you really liked it. My promise to you is in every episode to give you one rich behavior that can yield you 3 times richer results. That gives you a 300% return on your time spent with me. Remember, richer results are on the other side of today's rich behavior. You are worth more. It's time to make your move.